Hi everyone, welcome back. Today is the 11th of January 2021, and today I just want to talk about a losing trade that I have, and that is Fubo. I actually sell a 35 put that expired last Friday, and so today I'm assigned a share of 200 share because I sell 2 contract of the 35 put. So currently I'm long 200 share at a price of 35, but I did collected some premium, so that will offset some of the losses here. And let's look at the position that I have. It's actually I opened a trade on the 29th of December last year, and I sell 8th of January 35 put for $3.30. So my average price on Fubo right now is $31.70. And what is the mistake that I have done on Fubo? First, I'm being too greedy. If you have watched my video on the advanced build strategy, my aim was to collect 1% premium every week. So when I did this Fubo trade on the 29th of December, I'm actually selling on 8th of January. That is about 2 weeks. If you look at the strike price of 35, then I should aim to collect about 70 cents for 2 weeks, because 1% is about $35. Because I'm going into 2 weeks option, so I should aim to collect about 70 cents. But I was greedy on it, so I aim to collect 330 instead of 70 cents. And let's take a look at the Fubo chart on the 29th of December. So on the 29th of December, that is about this day here, I was trying to pick a bottom, and that is my second mistake. I'm trying to be smart and try to pick a bottom. Because on the 29th of December, when Fubo was around $40, the high was 62. And when Fubo dropped to about 40, I'm thinking that Fubo has already discounted about 40%. So being too greedy and too smart, I try to pick a 35 level here. And the premium I collected is $3.30. That is about 10%. Instead of the 1% that I was aiming, I'm trying to reach for 10%. My thinking was that even if I'm assigned, then my average price to long Fubo will be about $31.30. That is almost 50% off the high. So that to me may be a bottom. But I was wrong, and Fubo dropped, and in fact currently is well below my average price of $31.70. So just bear in mind that my average price to long Fubo is now $31.70, and the market is about $26.40. So I'm down about $5 per contract. I have 2 contracts. So right now on Fubo, I'm down about $1,000. So what is Fubo actually? I think Fubo is a streaming TV company just like Netflix. But there's some fundamental and potential for Fubo. Their customer base is right now much smaller than Netflix, which means that there is a potential that Fubo can increase the number of subscribers very fast, or even double up. And Fubo is actually trying to go into sport gambling, and I believe that if they can get into sport gambling, and that is a very good revenue for them, and from now till 2022, next year is a World Cup year, I believe Fubo will pick up. So fundamentally, I believe that Fubo still has a way to grow. So instead of cutting loss at this level, I intend to keep Fubo at least for the long term. Of course, I can change my mind anytime. But right now, let's talk about what can I do to recover from Fubo. So I will be looking at the option change on Fubo. I like to do weekly option, but of course, we can always do a monthly option. If I were to go for a monthly option, and let's take a look at the monthly option. What is the premium? Current price was about 26, and if you are looking at the $30 strike, then I will be able to sell it for about $4.40. If we take into consideration that my average price right now is $31.70, and if I'm able to collect another $4.40, that will bring my average price down to $27.30. And that is almost the current level. So any uptick in Fubo, I will break even on this trade. But then I give up all the upside potential, which I don't think I want to go for it. And going for a monthly option will means that for the next 39 days, I will be locked out of this trade. There's no capital appreciation. Of course, I give myself plenty of downside protection by selling a 30 strike call. So I would more prefer to look at the weekly option that expire this Friday or next Friday. So these are the two that I'll be looking at. And if you were to go for the next Friday option and looking at the strike price, if I were to go for a 30 strike, then I'll collect about $1.70, and that will bring my cost to about $30. And that is not bad, considering that in 2 weeks time, I will be able to replan my next set of strategy. And let's take a look at the weekly option that expire this Friday before I make a decision. And if I were to follow the strategy on this weekly option and collect 1% premium, when my average price is about $31, if I were to collect a 1% premium, then I'm looking to collect about 31 cents. If I can do it for 20 times, then I'll be able to collect $6.20. And for 20 times, that will take about 5 to 6 months. But if I were to collect a 30-cent premium on Fubo, then I'm giving the stock plenty of upside. Because right now I can sell for 33 strike, and Fubo has a lot of upside to go back to 33. But I'm not going to do that. And again, I am a very greedy person. So instead of going for my 1%, let me try to increase my return. So the strike that I'm most likely going to be looking at will be either 31 or the 32. 32 will fetch me about 60 cents, and the 31 will fetch me about 74 to 79 cents. Ultimately, which strike that I choose will depend on where do I think that the Fubo will go. I can't predict the market, so I can only try to guess or try to anticipate, because I still want to keep the stock. So I don't want to be called out from Fubo actually. So instead of going for the lower strike, I think I will go for the higher strike. So I'll look to sell the 32 strike. Right now it's going for 57 and 75 cents. So let me see if I can squeeze inside the mid price. And I have to sell 2 contracts because I have 200 shares of Fubo. I'll try to queue at 72 cents and let's see. Most likely I'm not done. Yeah, right now it's 67. Oh, I'm done at 72 cents. So let me do an update on my Fubo trade. So on the 29th of December, I sell to open 35 put that expire last Friday for $3.30, or that is $330 for 2 contract. And today I'm assigned because Fubo is below the 35 strike. So I'm long 200 share at $35. That brings my average price to $31.50. And right now I'm selling call at the strike of 32. And I sell it for $0.72. And that is equivalent to $72. And that will actually bring my buying price to be $30.78. That is assuming that my call expire worthless. And by signing a 32 strike, I still give myself a upside potential. So I'm giving Fubo an upside potential to go to $32. And if Fubo is to go up to $32, then on this whole trade, I'll be making about $1.22 because my average price was $30.78. And if Fubo were to go beyond 32 and I did not roll my call away, then I'll make about $1.20. But if Fubo were to stay below 32 by this Friday and next Monday, I'll be looking to sell another call option. And I will update this Fubo trade as we go along. But for now, I think I'm done for Fubo, at least for this week. But if Fubo were to start going up, I may decide to roll the 32 call further away, because I actually wanted to keep Fubo at least for the long term right now at this moment. So that's all for today and for the Fubo trade. If you like the video, please like and subscribe. Thank you very much.